Morning, everybody. It's the 21st of July. We are Signal Centre Talking Ball. I'm Joe, joined by Steve. How you doing, Steve?
Yeah, good. Thank you, mate. All right. How are
Good.
you? You're
Yeah, all
not
right,
feeling
thank you.
too well, are you? A bit blocked up, aren't you?
Yeah, a little bit, but we'll battle on. Happy birthday to Mum as well. Get that out
Ah,
there.
happy birthday, Mum. Yeah, can't forget that.
Yeah, one of our viewers of the 10.
Ah,
So,
maybe she's
um,
logged onto 5 devices, Joe, because my
yeah.
mum's logged onto 5.
Right, okay, that explains it then, doesn't it? Okay, so let's get on with it then. We're going to go through the latest headlines. We're going to talk about what's happening in the markets. We're going to talk about what's going on from a chart perspective on various asset classes ahead of the weekend, and hopefully set you up for the day ahead and give you an idea of what to expect next week too. So headlines, first of all. US jobless claims declined yesterday. The data declined to 229,000 in the latest week from 237,000 the previous week, and below the consensus forecast of 242,000. There was mixed Philly Fed survey data. The US Philly Fed manufacturing survey remained in contraction territory for July, with marginal improvement to minus 13.5 from minus 13.7, compared with expectations of minus 10. The US yields tended to focus on the inflation components within the Philly Fed survey yesterday, which suggested stronger pricing power. US yields moved higher on the day, with the 10-year yield just below 3.85%. The dollar made some headway yesterday. It helped pull the US dollar higher. That was the US yields, with fresh speculation that US rates would need to stay higher for longer. The dollar index posted a one-week high on the day and held the bulk of the gains throughout the day. Chinese warnings continue. The Chinese currency regulator warned that it would forcefully prevent sharp volatility in the yuan. The rhetoric continued to provide net support for the Chinese currency. This morning, we've had some UK retail sales, and they were stronger than expected. The UK retail sales recorded a 0.7% jump for June, compared with expectations of a 0.2% gain. There was, however, a significant dip in the GfK Consumer Confidence Index for July. So that's it for the latest headlines. Let's jump into the analysis. Steve, do you want to kick us off with a look at
Crypto.
cryptocurrencies? Yep.
Yeah, have a quick look at this. We'll look at what's going on in Bitcoin. Obviously, the one everyone's talking about is XRP. We'll have a look at that as well. Yesterday, we had a bit of a rally in Bitcoin, and
Need you
then
to
the
share your
pullback.
screen, Steve, if you can.
Oh, shit, yeah. Oh, cut. Here we go. This is the daily chart, and we can see we're trapped in a bit of a range at the moment, from between around about the 31,800 down to 29,500. That, for me, that's the main support level at the moment. If we do get a break of that, it opens up to the downside a little bit. And yeah, this could post what could be seen as a double treble top. I won't go quadruple quite yet unless we get another rally, then a pullback. But yeah, we're retesting this 29,500 level. And even yesterday, we had a rally to start the day, looking like we were going to recapture the sort of ground above the interim resistance at 30,500, and then failed and reversed sharply towards the close. Nothing really going on at the moment today. No real movement today. But we can see that potentially on the hourly chart, maybe we're forming some sort of bearish flag formation, something like that. So yeah, you can see this move here. The 3 o'clock hourly candle gave up those gains. XRP is of more interest, really. However, the last 24 hours again, it did attempt to rally higher. We've now got quite a decent level of resistance at 85.40. That's cents, not dollars. And support really coming in today at yesterday and the previous day's low, which is around 77.20. More major support probably down around about the 70-cent level. So yeah, just gave up those gains yesterday and on the back foot a little bit this morning. So I wouldn't be surprised if we do have another test of that 77-cent level. If we get a break there, I think there's plenty of scope for a deeper correction. We haven't sort of extended higher. We've just had this one 5-minute spell of an up move, which relates obviously to the SEC losing a case against Ripple. Lots of talk now about XRP and the type of token it is. It is a utility token of some sort. It does do a job, but maybe there's something else that Ripple are working on that. Yeah, there's lots of conspiracies going on that this may not be the thing that it was painted out to be. So, but it's worth 78 cents if you want to buy or sell it at the moment. So that's all up to you. I'm definitely more in the bear camp on cryptos, expecting a bit of a flush out before we do really see sort of like higher gains or higher highs. Here we go, gold. Looking at gold, we managed to sort of break through that 50% Fibonacci retracement level, which was around 1980 yesterday again. We did it on Tuesday. We got up to 1987 before reversing, and it's left us with a bit of a shooting star type candle. And we're trading around where we closed last night, trading around 1970. Next support, I'd expect around about the 1963 level, and below that, obviously 1935 is the major pivot level I see. But yeah, resistance clearly around about that 1985 to 87 level, and then $2,000 is the one to watch. 61.8% fib retracement and quite a good psychological level. Don't know whether we are forming some sort of inverse head and shoulders formation. If we are, it's still got quite a way to play out. Something like this would be the left shoulder. The head is quite clear all the way down at 1893. Potentially, is this the right shoulder for a dip back here, then an extension higher? 1935 for me is clearly a very important level, and you know, on the first revisit to there, I would be tempted to set a few longs with a very tight stop. So yeah, that's what I'm looking at on gold. Let's take a look at oil. What's going on in here? Let's make sure this is giving me the right prices, because it always fools me. We were trapped in this range. We broke out and we're a little bit higher than this at the moment. So we managed to find support around 73.77 on the WTI crude oil, and a bullish engulfing candle from Tuesday has led to further gains. We haven't quite taken out that high from last Thursday. That's at 77.17. That's the level to watch today. We're not far away from it. We're about 80 cents away from it. So that'll definitely be on the cards. But we are seeing, obviously, the momentum slowing down. Potential for a crossover on the MACD, but we need to see probably a break of that 73.70 support before we get anything like that. So say $74. That's the real level to watch on the downside. And as I say, 77.20 as a resistance on the upside. A break of either of those should lead to extension. So yeah, that's about it from my side. Let's take a look at the all-important dollar and all its little buddies before I look at
Okay. Thanks, Steve. Right, so dollar, decent rally over the last 24 hours. As we can see, a big green candle formed there. We can see prices started to stall just in front of support around 99.41 and the 61.8% fib level lower down at 99.17. 3 consecutive up days, and we've now rallied into significant resistance. This was the previous support zone, which we broke down through on the 12th of July. So this is the first retest of that level, and likely, I think, to gain some interest from speculators, because it is such a clearly defined support now resistance level. And it's going to have to do some work to get through that. Immediately above that, we've got further resistance here. We can see there's a number of lows on the wicks of these candles, which come in at around about 100.82. So expect there to be some resistance here. If we can close above that today, then that might be an indication that the bulls in the dollar are ready for a fight back, and we could see things extend higher, potentially towards this next level of resistance up at 102.00. So still some work to do. Not going to get too excited yet. Certainly, if you are a speculator, you would probably be looking to sell into this today in anticipation of further losses down towards this level here at 99.17, in line really with the overall trend, which remains bearish. So pivotal day potentially for dollar index, being a Friday, also being The start of the summer really, with schools breaking up today, that can mean that people start to go on holiday, liquidity starts to dry up. So it may be a pretty tough ask for dollar index to break through that, but we'll have to wait and see. Euro US dollar. So we talked yesterday about this potentially forming some sort of short-term top, given that it's rallied into this 61.8% fib level at 112.74. We posted this doji candle, pretty much having hit that to the tick, and then prices have started to reverse lower. Big move to the downside yesterday, as you would expect, because we saw that strength in the dollar index. But we have clearly defined support here at 110.95. So that is likely to get tested at some point. And if you think about what we just looked at on the dollar index chart and flip this round, it's pretty much the same looking chart. So we're looking for a test of this support zone here. It may attract speculators because it is quite clearly defined. But we'll have to wait and see. All in all, the overall trend still remains bullish on Euro US dollar, but there is potential there for a bit of consolidation or a correction to the downside. Let's take a look at cable, see what's happening there. The correction or the pullback continued yesterday. Another red candle being posted, but overall this trend line still remains intact. We can see there was a previous high from back on the 16th of June, which appears to be providing some sort of support. There's been a minor bounce from that level today. So again, this might attract interest from the speculators that the US dollar is going to continue its weakness, and therefore we'll be looking to buy dips in assets that are priced against it. So yeah, nice pullback on that. Is it an opportunity to buy? We'll have to wait and see. We were asked yesterday about sterling Oz, so I'm going to bring that up again today. And we had this trend line which was supporting price. So yesterday when we were talking about this, it was holding this trend line. It had a little bit of a poke below it, but ultimately it closed above it and held that horizontal support as well at 189.76. Now, we talked about this on the intraday charts, potentially forming a head and shoulders top. And we actually saw the breakdown of that. So this was yesterday when we were on the stream around 7 a.m. Prices were down here. They extended lower. But in recent hours, we've seen a nice pullback to retest that neckline of that head and shoulders top. So this now, for me, presents a much better opportunity for entry here. If you're looking to play this particular pattern, which to be honest looks quite nice. This is an hourly chart, but I do have to caveat that it is still holding this uptrend line on the daily. So a little bit of a mixed one. If you're going to gamble and speculate on this head and shoulders top completing, what has completed, if you're going to speculate on it continuing to move lower, then do bear this in mind, that we do have this trend line support still holding for now. Any other requests? I don't see any other ones.
You got a bit Daleki there, Joe. No other requests. Obviously, just well, yeah, well done on the euro dollar for the gun to head yesterday.
Yeah. Just to touch on this one actually, euro dollar, dollar yen looks quite nice. We can see here there was a clearly defined support around 138.19. Prices pulled back to that level, and we continue to see decent momentum to the upside from that. So that's been a nice trade as well. If anybody was watching that.
Yeah, nice.
Okay, yeah, let's move on to the gun to the head trades then. So this is where Steve and I.
Oh, we can do some. Should I do a quick run through of indices?
Oh, sorry, yes.
That's all right. I'm quite happy to move on to gun to head. Well, I'm not happy because I'll let you concentrate on gun to head and come up with a couple of ideas. I might piggyback off the second one because you seem to be sort of in tune with the market. Oz. Well, I don't know. Whichever one you're not going to do, right, I'm going to piggyback off. Yeah, find a couple because I'm definitely struggling on the gun to head, but you're keeping us alive at the moment. Have a quick look here. We'll be looking at. We are looking at DAX at the moment. Are we potentially? I drew this yesterday. This potential for a double right shoulder. That's what I think. Maybe we seem to be rejecting these highs around about the 16,225, 230, 240 level. Yeah, just really have to watch this carefully. If we do get a break of that 16,000 level and a close below there, I think the potential for further downside. If not, then we're marching back up towards those highs at 16,427. So yeah, good level to fade at the moment with a tight stop and plenty of room for the downside. So good risk reward on the DAX at the moment, fading around here. But maybe you sort of like want to see some confirmation if going through the 16,000 support level. Well, quick look at FTSE. FTSE's extending higher, looking pretty decent. Obviously, the dollar strength helping there as well. Resistance coming in at 76.90. Yeah, trading quite well over the last 3 days. Good, strong momentum upwards. No real slowdown. Obviously, the US, we've got sort of figures out over the coming week or so as companies release their earnings. And in the Dow, it's traded pretty well over the last week of price action after breaking that through that resistance around about the 34,500, 34,600 level. We pushed up and eventually got up to 35,365 yesterday, pulled back a little bit into the close, but still looking pretty decent. Almost a shooting star we were looking at Wednesday, but price action yesterday punched higher. Nasdaq, however, had a bit of a reversal. So obviously one of the big names earnings not going down too well there. We did highlight Wednesday's price action of a bit of a shooting star candle or giving up the gains. But yesterday's price action actually took out the whole of this week and Friday's price action. We closed below it. So that's pretty negative. Trading around 15,500. We're at a decent support level, 15,340, just below. So will that provide a little bit of support? It depends really. Well, as these earnings fly out the door, we could see some quite big extensions because there's obviously there's like top 6 companies in there that are predominantly most of the value of Nasdaq. So watch out for there. That could well see some decent volatility over the coming days. S&P as well, bearish engulfing candle at the top. So that looks a little bit bearish to me. Plenty of room on the downside before we find the decent support levels down around about 4,400 and 4,450. And even further before we see the trend levels down at 4,330. So a little bit of a stalling pattern. Yeah, that's a good indication. You could quite easily trade off that, maybe saying a couple of decent bearish reverse candles around about that 78.6% fib. And sure, we had some previous levels of resistance around there as well. So that's it. Let's go to gun to head.
Let's do it. So yesterday, well, let's just talk about the rules first. So Steve, there was a request for silver there. Did you see that?
I didn't see it. No, I'll have a look at silver.
Yeah, let's do that.
Let's go dive into commodities again. Oops, not cryptos. Taking a look at silver. Haven't looked at silver for a while now. Let's take a look at the weekly chart. Obviously, we've seen good price action, and with this dollar weakness, we've seen a decent rally. 22.11 was the low the week of Monday, the 19th of June. The extension higher last week was pretty positive. This week, we haven't really done a lot in silver. We're stalling in front of these resistance levels up here, anywhere between, well, we could say anywhere between 25.25 and 26.12. A bit of a band of resistance, and you can see previous price action as well, offering good resistance around this area. So definitely heading up there, and on the coattails of gold, I suppose. But let's try and break it down onto the shorter term technicals to see if we're seeing anything. So yesterday's price action, again, bearish outside candle. So that's pretty negative as well in silver. And really sort of like looking at the next clear support line, I would say, is around about the $24.65 level. Resistance will be at yesterday's high, no doubt. And we can see that if we look back into sort of like what the price action was around April and May, we formed that really lovely double top formation. The neckline was around about just below where we're trading at the moment, 24.63. So that's a level to watch. On the downside, I think if we do get that break, then we could see something similar. Prices have sort of obviously retested this band of resistance now, and are failing at this moment. Really need to sort of see a projection above 25, 26. And if we get a little bit of dollar strength, I doubt if we'll see that. So really focused on this 24.60 to 64 level to see whether this can break. And we should see quite a fast move, I would say, because if you think about how quickly we got this rally, the gains could be given up just as quickly. Shorter term, we've got a 4-hour chart. We've got a nice sort of like topping candles here, shooting star, hanging man, then a bearish engulfing, and then the extension lower. So really looking at this Ichimoku cloud support anywhere between 23.75 and 24.45. So a really wide band. So not really one to consider, I suppose. And the hourly chart, we forming a bit of a bearish flag. Definitely one to watch. Something like that. So we should see resistance up at these levels, 24.90. If we do get a clear break and a close below this 24.74, that could signify where we're basically playing out this bearish flag formation. The measured move target for this, quite like this actually, this trade. Something like that. They'll be looking to move to 24.40. So yeah, silver, nice little, if you're in bear mode or sort of like a little bit negative towards silver, that's quite a nice risk reward trade idea to add to your toolbox. Let's go to gun to head. Hope that was hope that helped.
Yeah, I like that,
Jeffress.
Steve. Thank you. Okay, gun to the head trade. So Steve and I picked trade ideas live on the stream as if we had a gun to our head. Both the ideas have to have stops and targets. We must have risk reward ratios of 2 to 1 or better. We close the ideas at 9 p.m. UK time. Just means we don't have to incur any additional costs for holding these trades overnight, and we can come in with a fresh mindset the next trading day and pick another trade. So obviously it does limit how long we give these trades to work. We are risking 1% of trading capital per trade. Yesterday we had a couple of trades as usual. I went short of euro dollar, which worked out quite nicely. In fact, I'll bring that up on the screen so we can just talk through that. It was an intraday setup, so it looked as though prices were starting to consolidate or form some sort of short-term top. This was where I got in on the trade yesterday. Prices then pretty much collapsed. It looks as though they're trying to consolidate at the moment, potentially forming some sort of flag before maybe another push to the downside. I also used the market profile chart to give me a bit more here. So just using this month's worth of price action here, we can see that a lot of the trades that are taking place on euro dollar were up in this range, indicating that I think the bulls were losing the battle at that point. Obviously, the prices have been moving higher, but lots of transactions taking place here, indicating maybe that it was looking a bit top heavy. And in that instance, it played out quite nicely. So
Yeah, really nice.
pleased with that. Steve, what was your trade again? Was it oil?
My trade was oil. I was selling oil, and yeah, hit the stop pretty quickly. So yeah, not really too happy with that one, Joe. But and then it hit the stop. Well, actually, on the actual chart, it looked like I got close to the stop, but on the account I was stopped out. On the chart, it looked like I'm still in, so I got a bit excited because it was back to entry level. But then checking the account, it was stopped out. So that little spread thing that the old brokers do, that really caught me out, didn't it? Eh? It's
Yeah.
not like the old days where we used to trade at sort of like that spot prices, Joe.
No, long gone are the
Yeah,
days.
it's tough. It's tough.
Okay, so we've got to pick some new ideas today, Steve. I am pretty sure I'm going with Sterling Oz. Was waiting for this one yesterday. Nice head and
Like this
shoulders
one.
top on the hourly. Nice retest of the level. We've got market profile on here as well, which indicates that most of the transactions are taking place somewhere in this range. So my stop loss is going to go just above that point of control that we have on the chart. So I'd like to sell it at market, and I'm going to have a stop loss of 90.84, 190.84, which is just above the high of this candle that basically created the breakout in the first place to the downside. This big red candle here, stop
Yeah.
loss just above the high of that. The measured move of the head and shoulders is all the way down at 86.36, which seems very ambitious for a day. So let's make that maybe a little bit more realistic and try and target these lows that we saw yesterday. That will be at 88.62.
Nice. About 2.6 to 1, is it, Joe?
Yeah, roughly around that level.
Nice one. That's on.
Okay, thank you very much. Let's see how that goes. So, I mean, I've got a couple of candidates for you to maybe look at, Steve, but silver
Yeah.
maybe where you go.
Yeah, I mean, yeah, silver's quite a nice one. So I'm gonna go for it, Joe. I'm not even gonna sort of think twice, although I'm thinking twice. Yeah, let's definitely go for this with loads of confidence. Um, all for the reasons I've given. If you There's no point in going over them again. We've just talked about them. So let's see how we can get this trade on. We want to sell it. We want to sell it at market. And we want to have a stop loss. I can be aggressive or as conservative as I want, but the measured move target is quite clearly down at around about this 24.40 level. Let's see what 24.50 says to us. That gives us a 30. What we're talking about now? About a 40-cent target. Is that right? Anyway, we're looking at a move down to 24.50. Yeah, that's a 30 odd cent target. 32-cent target. Let's think about what sort of risk reward. I like sort of 3 to 1, but is that a little bit rich? 24.93. Yeah, why don't we go for that? Oh, 1% we want to risk,
10.
don't we?
Yep.
I'm going to be aggressive with it. Funny enough, Steve, aggressive O'Hare. And we're looking at like the stop is above this flag formation that we're forming at the moment, and maybe I could move it slightly higher, but I've done it. I've set it now. You're in, Steve. So looking for a target all the way down here, and hopefully that can play out nicely and give us a little bit of a win. I'm desperate for a win, Joe. And Jacobus, thanks very much. It's all down to you. I won't take the credit, honestly.
Yeah.
But if it goes wrong, it's definitely yours.
Yeah, it's definitely your fault if it goes wrong. Okay, great. Well, let's have a quick look at the data then that's due out today, and maybe a quick preview of next week. So we have today Canadian retail sales. That's at 1:30 UK time. On Monday, we've got global PMI data, and on the 26th, 27th, and 28th, we've got central bank policy meetings, the Fed, the ECB, and the Bank of Japan. So next week will be an interesting one for sure, to see what they are planning with regards to monetary policy. So yeah, something to look forward to next week. But in the meantime, we wish everybody a lovely weekend. Thank you very much for watching, and we will see you next week.
Excellent. Cheers all.
Have a good one. Bye bye.